This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. And as I mentioned in yesterday's report, if we zoom in a little bit here, I was mentioning this long wick right here, how there could be a short setup if prices get close enough to there, placing our stop just a bit above the high of this wick right here. And again, it was a very similar setup to over here on the left hand side to this long wick setup. So what happened is prices did come up. I personally did enter this trade. I'm still in this trade as we speak right now. We did have a little bit of a spillover. The high of the wick is about 93.74. The high of those two wicks over here was about the 93.80 area. So that's again, my stop is 25 pips above the 93.74 area, just beneath the 94 figure. So that's where I'm keeping my stop right now. But you at home, if you're listening to this to the first time, you might use this area right here as your stop reference point. Again, that would be 93.81. So look to get an entry near the 93.80 area, and then place your stop maybe above that 94 figure, again, or whatever satisfies your individual risk parameters. And again, let me zoom out here, and the target for that trade could be this simple support line down there. But again, this is the hourly chart, and with short-term analysis, you have to be able to abandon it right away. That's why I'm advocating relatively tight stops in this situation. So fully prepared to be stopped out, and this way that's how you go into the trade with the proper mindset. The next chart is the Aussie Kiwi, and this is the resistance line that I was using, and we had a move above it. And I was mentioning in yesterday's report, this long wick, this is a daily chart. Let me zoom in a little bit here, get a better view. This long wick, using that as a reference point, but prices just tanked after the report yesterday, so there was really no chance of an entry. With that being said, let's zoom out a little here, and it looks as though prices, and let me get rid of this resistance line as we speak here, and it looks like prices are heading towards that 38.2 for a test. So in my opinion, we had prices did find a bottom, at least a temporary bottom, just above that 38.2. If this is a fifth wave of a smaller wave pattern here, we might expect prices to take out that low by just a little bit, which would kiss that 38.2 fib, which is right near the 20.55 area. So that's an area of potential support on the fib lines. And one thing I like to look for in terms of Fibonacci trades is to have a long wick come down, penetrate the fib level, and then have the candle close back above the fib level. And then again, we could place our stop just beneath the low of that wick. So this is a scenario that I'm looking for maybe over the next few days, but certainly something we can keep an eye on, that it could develop within the next few hours. The next chart is the Pound Swiss, and not much has changed here. This is that simple former support line that did act as resistance with this trade here. What we can do, and what I did in yesterday's report, is slide this line down here and possibly look for an entry on the long side. And again, we'd look to enter maybe just above the support line with a stop, maybe 50 to 75 pips beneath that support line. If that support line holds, then we can use that old line here, and we can use that as a possible target for our trade. The next chart is the Euro Swiss, and not much has changed here either. I'm still waiting for prices to come up and touch that resistance line. It looks like we have at least maybe a temporary bottom forming here. You can argue that this is a hammer candle, and that's a borderline doji candle as well. So this low could be well protected. That is in the 151.80 area. But again, I don't like entering this, because this would be considered in the middle of the range. So I would just keep this particular pair on the radar screen. But this price action here is making me a little more confident that we might have a move to that upper resistance line. Again, we'd look to enter at the resistance line and place our stop maybe up about 50 to 75 pips above the resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.